Right now in Nigeria, you can actually earn double digit returns backed by the federal government without actually even investing in stocks or all the sorts. Hi, my name is Chisom, and today we're going to be talking about FGN Savings Bonds. I know you've probably seen it around Bamboo or some other in brokerage apps. Yeah, we're going to be talking about them today. FGN savings bonds are retail debt instruments issued by the Debt Management Office on behalf of the federal government of Nigeria. And no, you're not buying shares. So basically, you're lending money to the Nigerian government, and in return, they're going to be paying you interest every quarter. And at the end of the duration, the end of the period, they'll be giving you back your full capital. So it's basically fixed income, not equity. FGN savings bonds are usually issued in 2-year tenors or 3 years tenor, and each one costs, I think, a minimum of 1,000 naira, and the minimum you can invest in it is 5,000 naira, and maximum is 50 million naira. Interest is paid every quarter, and at maturity, your full capital is returned back to you. They are also listed on the Nigerian exchange, which means they can also be sold before maturity, but liquidity may vary. So sometimes it might be difficult to sell, but at maturity, you will get your money back. As of last year to this year, interest rate on FGN savings bonds was between about 14% to 17%, roughly 18%. So, for example, you invest 100,000 naira in a savings bond with an interest rate of 15%, which means 15,000 naira basically. Now, it will be paid every quarter, which means 4 times in a year, which is a division of 15,000 naira into 4. So, roughly 3,750 every quarter. That's basically what it means. Then, at the end of the year, after the FGN savings bond, after the maturity date, you will get your capital, and also you've already gotten your interest 4 times that year already. FGN savings bonds are generally considered safe because the repayment is backed by the federal government. And that is why pension funds and institutional investors use these government securities to back up their portfolio. But you need to understand that safe does not mean risk free. There could be inflation risk, whereby if inflation is higher than your coupon rate, your returns reduce. Liquidity risk, even though it's listed on the NGX, selling before the maturity date might be a real hassle. Maybe you might not be able to sell before the maturity date. That's where the liquidity risk comes in. And opportunity cost, stocks may outperform. What am I saying may? Stocks mostly outperform FGN saving bonds because they are a little bit more stable. So this is not a get rich quick scheme. It's just a form of capital preservation and income stability instrument. So it's not like you're going to make so much money. So, and the reason I spoke about this is because smart investing does not always mean chasing high returns all the time. Sometimes your capital just wants to be preserved with a little interest on top. So if you have some money lying around, that could be another option. Doesn't mean you shouldn't invest in stocks. It doesn't mean you shouldn't invest in ETFs. It just means these are other forms of diversification of your portfolio, of your capital. So yeah. And before anything, do your own research. I'm going to keep saying it. Do your own research. And as always, follow me, like, share to your friends who you think might need this, and I'll be seeing you in the next video. Bye bye.